G'day guys, welcome to the channel. My name is Tim, and on today's episode we're taking a look at Bitcoin, and we're looking at this particular trend line that we've been watching over the last couple of months, 101 days to be exact, and where it may be headed and how it compares to trend lines we've seen in the past that may give us some clues. And at the end of the video, I'll be talking about this little section here, which is where the 1400-day moving average, which is typically the bottom that Bitcoin bounces off, as well as where this trend line are converging and all the points along that way. So this could be really interesting. All right, so let's get into it. So we have seen Bitcoin go essentially sideways over the last couple of months, but it has been following this downward trend line. Now, it has been 101 days since the peak around the 14th of April to where we are today. And, we have essentially been going sideways and slightly down. Now, in the last couple of days, we have seen some really positive action for Bitcoin, and it is getting a lot closer now to the 50-day moving average. And why this is important is because what we've seen in the past, and let's zoom back a little bit. Let's have a look at 2017, which is, right here. So in 2017, the 50-day moving average, which is this blue shaded line, you can see that we start above it and then we go below it, and we have this kind of V shape here. We go above it, below it, above it, below it, above it, below it, above it, until we equalize. And that's where the price and the moving average come together. And that's when something normally happens. And in this case, we capitulated down here and we equalized with the longer term moving average, the 1400-day or 200 week moving average. Okay, so that's why the fact that we are making our way towards the moving average is very important to note. So this is 2017, 2018 that we're looking at the moment, but compared to the current cycle, we appear to be about here, just about to break this point. Now, you can see what happened when we broke the point in 2018. We got up slightly here, but then we crashed through it again. And we ended up touching, or creating rather, this trend line. And you can see we basically go up above it and go below it again, but we're always coming back to this trend line. We stayed above it for a while here until we came back to the trend line. And the trend line actually intersected right here with the 1400-day moving average and actually gave us the exact bottom, which is really, really exciting. So we're going to take a look at 2021 to see if we do the same thing as a potential roadmap, where the exact bottom potentially may be, and the kind of roadmap we can expect to see over the coming months. Now, just quickly, to give you an idea, we reached this bottom exactly 12 months. So you can see this point here, that was exactly 12 months. That was like the 18th of December, which is 18th of December 2017 to the 18th of December 2018. So exactly 12 months from the tip to the dip. I think that's incredible. Exactly 12 months. And then we went up a bit, and then we bounced back on it again at a slightly higher price. And that was about 13.7 months. So I've just said here, somewhere in that 12 to 14 month range is where we bottomed in 2017, 2018. But the two things to look for there are the trend line that we bounced off and the 50-day moving average, where we alternated between going above and below, above and below. Almost like you could almost argue this is accumulation, and then this is distribution. Accumulation, distribution. So the market is continually going through those cycles of going up and down, but the moving average itself is going down in this sort of rolling pattern until we converge down here at the bottom. So that was 12 to 14 months. Now, let's have a look here. To this point here where we equalized, I'll just see how long that point was. So date range. So we'll go from the peak, just roughly here, to when we equalized. It was about 270 days. So just remember that time frame as well. So about 270 days. I'll just go 270. I think it was 272. This is rough. 272 days until we equalized at this point. Okay. Now, with all that in mind, let's have a look at where we are currently with 2021. And for those that think this might be a little bit bearish, talking about going down, I will show you an example of where a market has done this before, where it's actually gone up again. So I'm going to show you what Amazon did during the dot-com bubble. I'll show you that in a few minutes. So this is where we are now. And now you can see here, we're getting very, very close. We're about 1%, I think, about 1% away from the 50-day moving average. Now, we don't have to touch it. It is possible that we turn around and go down again. That is possible. And that's what happened at this point. I was thinking, okay, we had this double bottom. We've got a bit of momentum. I was thinking that maybe this is the point where we go above it and then go below it again. But we didn't. We just ended up going below it. So it is possible we go down. But there just seems to be a bit of momentum in the market at the moment. So it is very possible that we touch it or we go above it. And at some point, somewhere in here, we don't know where, it may get to a point and then might go down again. And that's what we've seen in the past. It's happened in every bull run that we have a peak, and then the moving average looks something like this, where it just sort of rolls down like that until it equalizes, and the price goes above it and below it, above it and below it, and above it and below it until we equalize. And then that's the point when we start working our way up again. Okay. So let's have a look at these dates and how long it will take to get to this point. So I've just drawn in a trend line here, and I've used these points. Now you could use these points instead, which would change the angle slightly. So we don't know exactly where this trend line is going until we get some more data points. If we see things go like this, if we see things like that, it'll confirm the trend line. So we have to keep an eye on this, and we can keep adjusting it as we go, and that might give us some more indication. And I've done something similar here with the 1400-day moving average. You can see here, 1400 days is a long amount of time. It's about 4 years. So it's actually it's measuring from about this point onwards at the moment for this 4 years. So it's a slow moving average. It's taking into consideration the peak that we've already had. And if the price keeps going down, this average is not going to do something crazy. It's not going to do that. It's also not going to do that. It's going to have some sort of trajectory where it is at the moment. And again, we just need to keep adjusting this over time. But at this point in time, this is where it is going to. And you can see this intersection point turns out to be around the 18th of January, 2022. Now, because it's not perfectly accurate, I've just circled a range here. And in fact, I would also argue, I'd argue that this range is basically an entire season. So for the Southern Hemisphere, we're dealing with summer. So kind of December, January, Feb. And for the Northern Hemisphere, we're dealing with winter at that time. So this is the point where the trend line as it stands now and the 200-week or 1400-day moving average are converging somewhere in that time frame. And that's actually about 9 months from this peak to that point. And that's a lot shorter than what we've seen in the past. However, let's just check out this date range. That 272, I've got a feeling, look at that. Isn't that very interesting? About 277 days from the peak if we go somewhere around this point. And you might remember from a few minutes ago, that's when we equalized with the 50-day moving average. We weren't anywhere near the 1400-day moving average at that point. So these are just some considerations to keep an eye on. No one can claim they can predict anywhere in the future. So these are just some particular trend lines, and particular averages, and that we can keep an eye on and keep adjusting. But yeah, somewhere in this ballpark, we should expect, if we follow what's happened in previous years, we should expect some sort of convergence with the moving average and the price, and that's when we can then bounce up or do something different. Okay, I'll give you one quick more example here. Another quick example, I should say. 2019, we can see that the trend line was also something to keep an eye on here. So you can see we keep coming back to this trend line. And look at this big bounce there, and then we crash down there for the COVID crash. but it was still in line with the trend line. And again, you can see compared to the moving average, we go below, above, below, above, below, above, below, above, below. So this sort of up and down action is what we should expect. We've seen it happen on every bull run since 2013. I've gone back through all the data. We always go above and below the 50-day moving average, and that's why it's been a bit strange. Well, not strange, but that's why so far we have just been below it. Since this point here, we've just been below the average. So at some point, if we follow what's happened in the past, we should go above it. So that's something to keep an eye on. So, okay, now for those that think that this is the V-shaped recovery that we may have, we may go up and do this sort of thing. I'll show you an example in history where that has happened before. So this is Amazon, and this is Amazon during the dot-com bubble. So you can see the dates here, 1999, Amazon had a peak, and the exact date there was, looks like 27th of April or so, 26th of April, 1999. Then it had a 59% drop, which is roughly where Bitcoin has dropped to. I think Bitcoin was about 57% or so at its lowest. Somewhere I have to double check that, but in that ballpark. And then Amazon had a V-shaped recovery, this big V shape here, and went back up and ended up having a double top, as you can see, both these peaks. And the distance between those two peaks was 162 days. Now we are currently 101 days from our first peak. So 101 days from the 26th of April brings us to about this point. So just where there's a bit of momentum, we're peaking above the moving average. These are the same moving averages, and we went back up and touched that peak. Okay, so it has happened before, but there is something I'd like to draw your attention to, and that is the market cap of Amazon at that time. So Amazon had a market cap at that time of about $30 billion in 1999. And $30 billion puts it in the range of, it puts it smaller than Cardano, which is 38 billion, almost 39 billion. It puts it around about where XRP is at the moment. And XRP obviously hasn't been performing well in recent years. It also puts it around Dogecoin, so it's slightly bigger than Dogecoin. Now, obviously, there's been inflation, and over the years, the CPI has changed. So these, that was over 20 years ago. So maybe to be fair, it's probably around the size of Cardano, around like for like, around that $39 billion mark. Yeah, somewhere in that range. Maybe BNB and Cardano to be fair. So that's the range where it was. Whereas Bitcoin's way up here at over $600 billion, and in fact it peaked at about twice this, the I'm trying to think what it was, 1.5, somewhere in that range. We have to double check that. So Amazon had a much smaller market cap, and now Amazon's market cap is actually $1.8 trillion. So about 3 times what Bitcoin is at the moment. So it is possible, can't rule anything out, that anything's possible that we do a double top or go high. But if we do a double top, I'll just show you what happened to Amazon after that dot-com bubble. So they did their double top with that 59% drop in the middle with the V-shaped recovery, 162 days later until the next peak. But then they ended up dropping to 94%, which is absolutely devastating. And it took a decade. Look at this. 2005, if you look at this line here, it took a decade until they reached a new all-time high. December 2009, until they actually got above that. And you can see they've gone onwards and upwards since then. So, long term, they've done really well, but having a double top is not necessarily a good thing. So anyway, there's a few things to think about. It appears like Bitcoin is getting some momentum, although you can see it's sort of starting to turn, but we'll see what happens. But if it does follow what's happened in the past, either that was the point to bounce, and we are bouncing off a trend line here. That was the point that it's got some momentum to bounce above the 50-day moving average. But if we do, don't be surprised if we go below it again and then go above it and then below it and above it and below it until we equalize. That's what it's done in every other cycle. It's never done a big V-shaped recovery and gone up again. And even 2013 did the same thing. It went down here, it equalized before it went away and did its second peak. So there's a couple things to think of. I hope you enjoyed the video. I'm enjoying making these videos. I love to zoom out and get away from the 4-hour chart and the 1-hour chart and try to look at the big longer-term macro trends. And everything else, essentially becomes noise. And I really enjoy looking at this this way. So I hope you do too. And until next time, I'm Tim, and cheers.